Stocks soaring to a 3-month high this morning on a good news, little bit of bad news job report. We're going to have Paul Vigna to tell you all about it. There's a shot of the big board right now. Plus, move over Phelps and Lochte, the real Olympic Games. They are about to begin with track and field. Our sports guys are going to tell you what you need to be watching out for. And we're going to tell you how a naughty bear named Ted gave Hollywood a big lesson in social media. I am Wendy Bounds. Welcome to WSJ Lunch Break. The unemployment rate ticks up and the stock market cheers. I don't know. How do you explain that? Paul Vigna is going to do it. He's the Markets Hub host. The good news and bad news in that job report.
Good news and bad news, Wendy. Good afternoon to you. Good afternoon.
Good afternoon.
The market's reading just the good news, though, right?
Seems that way.
The headline number was 163,000 jobs created in July, better than the market was expecting. And you have to keep in mind, stocks were down every day this week.
Right. So is this just a little bump because of that?
Yeah, I mean, part of it is just a reaction to that. You're sort of coiled, right? So any kind of a good number is going to get a pop. You got a big pop. Dow's up to over 200 points now. So the part of it is just a reaction in the market. But part of it is the market's in this sort of beautiful little spot for it where it can spin bad news as, well, that just means the Fed will act sooner.
Interesting.
And it can just sit on good news. Oh, good news is good news. So either way, they can find some reason to go out there and buy. That's why you're seeing some of what you're seeing. Now,
looking at the unemployment trend here for July and the past months.
Right. You look at the unemployment rate there, up to 8.3%. The question is, why is that happening? Right. Is that people coming back into the labor force because they're excited, or is that people dropping out of the labor force, just leaving because they're discouraged?
Yeah.
Right. There's some evidence that it was people leaving the labor force. That is a concern, and the reason it's a concern is because if there are less people working, the participation rate dropped. That's why I'm saying this.
Two other good things.
If there are less people working, there's just less people producing, less people contributing to economic growth, contributing to the tax base. That's why that's a real concern.
Two other things in the what's happening this morning. Kraft Foods, Procter and Gamble, both reporting good earnings, giving a bump to the market as well there. Anything else we need to know? Europe, the service sector numbers?
The big thing out of Europe today, the service sector numbers came in a little better than expected. That helps. It's just a reading on the service sector. Spain is going to be a big issue. Spain, Prime Minister Rajoy today came out and said, maybe we think about possibly could ask for some help. I mean, kind of came out and said, we're thinking about asking for a bailout, which in the coded word of these bureaucrats means we're going to ask for a bailout. We need it. We can't survive anymore. That is coming down the pike. Whether that happens in August or September, how the market reacts to it, those are open questions. But you can almost guarantee that Spain is going to ask for a bailout. And when they do, you're talking about a top 10 economy in the world needing a bailout. That's a terrible sign. There's no two ways around it.
All right, but everybody's feeling pretty good this morning.
We're feeling pretty good right now. We're all going to have a good weekend.
Hope you feel good. Thanks, Paul Vigna, for being
I feel all right, Wendy. You know me.